Many of you are looking to move to Florida, and that's actually not surprising because according to many reports out there, Florida was the #1 place people moved to in 2021, and it continues to be a very popular destination place. But a lot has changed over 1 year when it comes to real estate, homeowners insurance, and mortgage rates. So in this video, I'm going to be providing you with the latest updates to help you navigate the ever-evolving landscape here. There's going to be so much insightful information packed in this video, so make sure you watch until the end so that you have all the information available to you. And let's get right into this video. The real estate market was on fire in Florida, especially in the beginning to mid of this year. It was not unusual to be in a multiple offer situation with 10, 20, or even 40 offers on a house. If you were a buyer in the market then, it was very difficult to secure a home because of the extreme competition and low inventory. Cash buyers were approximately 35 to 40% of all the offers coming in, and so if all else was equal, cash buyers typically had the upper hand here. Around June, July, and August, the market started to stabilize as the mortgage interest rates started to go up. So let's review top line data. Per Florida Sun Stats data, the overall Florida median price for a single family home peaked in June at approximately $420,000 and it dropped to $407,000. That's a 3% price drop over a 2 months period. One could argue this is the turning point, that prices are going to continue to go down. And that could be true or maybe not. I don't think it's ever a good idea to look at data that focuses on just one point in time. And so if we go back to say 2019, 2018, 2017, the prices are higher in June and then they drop in August. I believe that this is due to a summer slowdown that we typically have here in Florida, except this year it was slightly amplified with the interest rates going up. Supply and demand dictates prices, and in the middle of the year we had an increase of new listings to the market. And my theory is that a lot of sellers were rushing to the market to take advantage of the peak. And now that rush is over and new listings are actually now starting to drop again while demand is still holding strong. The key real estate selling season in Florida is from January to May, when the highest number of buyers in the market, and prices typically trend to go up during those months. So right now you may actually have a window of opportunity before it becomes more competitive again next year. But I also realize that it's a really confusing time right now to be a home buyer, right? I mean, I would feel the same way, especially reading all these negative headlines. So many credible analysts, such as Fannie Mae, are predicting slight price increase into 2023. I believe that the next few months are going to be so crucial in helping to understand what the trend line is going to look like moving towards the end of the year into next year. And so if you're somebody that's looking to purchase, but you're just not confident in the real estate market right now, give yourself another 2 or 3 months and look at the data to better understand where the market is headed. And only purchase if it feels right. Homeowners insurance has been a real pain point, not just for those of you looking to purchase a house, but also for Florida homeowners such as myself, because the premiums have gone up so much over a short period of time. In this next segment, we're going to be speaking to Jennifer Osiwala, a trusted home insurance agent, to get her input in terms of how we got to these high premiums to begin with, her tips of what to look for when purchasing a home, and how to reduce rates in general. Jennifer actually assisted me with my own homeowners insurance. Why are home insurance rates so high? Mine have doubled over 2 years.
And mine have as well. It is the hot topic in Florida right now. A lot of people don't realize that we share insurance claims with your neighbor, with the Panhandle, with Miami. So if Miami has a hurricane come through, we're going to, of course, share in some of that claims that they put in, and also in the Panhandle. So I know in our area, Sarasota area, we don't get hit with hurricanes all that much. I hear it all the time. We never have hurricanes. I've never had a claim. Why is my insurance doubling? And that is one of the reasons, because we share in the claims of what goes on in the state of Florida. We are the #1 state for fraud. We have a huge fraud claims in Florida, which have caused our rates to increase. The last 3 or 4 years, the Panhandle has just gotten hit with storm after storm, fraud being the #1, the roof claims that we're dealing with right now. There were roofers that were going around telling people like, hey, we can put a new roof on your house and we'll have insurance pay for it. They were using like a previous storm, and even though maybe a shingle or 2 was taken off of the roof, they're getting whole roofs replaced.
Is there any recommendations you have to current homeowners in order to help them reduce the insurance rate? Is there anything we can do?
There are some things you can do. Of course, wind mitigation is the best thing you can do. It's costly if you want to put all hurricane windows and doors in your house. And it has to be every single opening, every single door, even that little side garage door that you have has to be hurricane proof to get the discounts. Any type of clips or straps of how your roof is attached in the attic, those are going to give you discounts. Also, the size of the nails that they use to put the roofs on, that gives you a discount as well. So you'll want to get a wind mitigation inspection completed. The reports last for up to 5 years. So once you get it done, you can use it for another 5 years. And that will provide your discounts that we can submit to the carrier so we can make sure you can get those discounts. Another one is second water resistance, and that provides a huge discount. I even have some carriers that will not even write now if you don't have second water resistance. So if you're looking to purchase a new home, if you can kind of know what it looks like in the roof, it's usually the line around the top that helps with drainage. That provides a nice little discount.
It's going to be much harder to get a home insurance on a house that has a roof that's over 15 years old. Can you really give us all the details? Because that's been somewhat confusing, not just to buyers, but also to agents, because it seems like it's constantly changing.
It is constantly changing. We get memos weekly, and we really have to stay on our toes to stay on top of all the underwriting guidelines. Some carriers are saying they don't want shingle roofs over 10 years now, so it's not even the 15. Shingle roofs used to be 20, 25 years. We do have carriers that will take the older roofs. So it's not like if it's a 16-year-old roof, like, oh, I'm not going to find insurance. It's not like that at all. You're going to pay a little bit higher premium, or a lot of the carriers are excluding the roof. They'll be like, we'll give you coverage on the home, but the roof is excluded, or they'll do an actual cash value of the roof. For tile roofs, they're really not liking over the 25-year marker on the tile roofs. I do have some carriers that are like, nope, not over 20. So again, it just depends on the carriers. They each have different underwriting guidelines.
So beyond the roof, are there any other elements of the house that we need to be aware of?
Water heaters, they don't like over 15 years. So if it's a little bit of an older water heater, they do want those replaced. If it's older, they want usually a picture of it. We have to submit that into underwriting and get it approved before binding. Another thing that lately the underwriters have been coming back with us on is trees around the home. If there's any kind of tree that is hanging over the roof or over the house, they want them trimmed back. They don't want any kind of bushes or anything touching the homes. And I run into that pretty much daily, where I have to have people trim the trees around their houses. Or underwriting is going to cancel them. Plumbing is another. Have hard corrosive water here in Florida, so the plumbing tends to be a huge claim here in Florida. That's one of the number one claims that get put into on homes. They do like plumbing. If it's a house over 40 years old, they're going to put limited water coverage. Some of the homes only have to be 35 or 30 years old. Also, the water backup, which is if you have a backup in with the toilet, they're starting to exclude that, and it's an endorsement we have to add back on. And that usually is capped at about $5,000. Carriers do not like the cloth wiring. In the electrical panel, things are double tapped. Those are things that would need to be fixed before you would purchase the home, or before we could at least put insurance on it.
Would you suggest that the best way to proceed if a house is somewhat questionable when it comes to the insurability of the house, to contact you first before even going to the offering stage?
Absolutely, because that just gives you an idea. I mean, because if it's being escrowed, it's going to affect your monthly payments. And you don't want to get into a house that all of a sudden you can't afford it because the insurance and the mortgage rate is just above your budget. Give us a call. We would be happy to run a quote for you, or just even give you a ballpark idea.
All right, so let's change the conversation a little bit and talk about flood insurance. What zone would be considered a flood zone, and how does that impact the home insurance cost?
I hear that they're rezoning things right now here in Florida. If you are in, let's say, an X zone, that is the preferred rating zone, and you're going to get the FEMA best rates on that, just depending on what coverages you want on the home. Now, if you're in an A zone, a V zone, or a B zone, and you have any type of mortgage, they're going to require flood coverage. So you have to have it to get a mortgage. I do have some people that don't have a mortgage, so they don't carry the flood. They're self-insuring on that. So you don't have to carry it if there's no mortgage. But if there is a bank involved, they will require that flood coverage. When you are in those zones, you are going to be rated higher. We have multiple carriers to quote flood through. So it's very competitive now. It's not that you just have to go through FEMA. We have surplus lines to quote it through. We can get competitive rates.
Just directionally speaking, how much can it increase the home insurance if you're in a flood zone? Say you're in AE.
If you're in AE, I have seen, again, it depends on the home. Gosh, I've even seen flood more expensive than the home insurance rates. If you're out on one of the islands, I have actually seen that the flood be more expensive than homeowners. So if that gives you an idea, there's just so many variables involved when the rate comes in.
Where do you believe home insurance is going to be headed into 2023? Do you actually believe that the prices are going to come down? Or are they going to continue to double every 2 years? And what's the government doing about all of this?
I don't have a crystal ball to look at, but as long as we have a minimal hurricane season, knock on wood, we got a few months left here.
Okay,
I don't see home rates going down, but they could probably level out. Now, the state is looking at doing some things. They've already put some laws into place with the roofs. There's a roofing schedule and payout schedule that the carriers have to work by now. Today, I even just got some notices that carriers are opening back up and starting to write again. So that's a good thing. They're using the roofing schedule for that. As long as we can get some of those guidelines put into place, if it's a problem with the roofs, there needs to be more stringent approvals before you pay out on the claim. And it's on the carrier side as well. There's a lot of different things that need to happen for the rates to start to go down. But as long as we can keep the hurricanes away this year, I see that it should be leveling out next year. Okay. If we have a bad storm year, again, we all pay into the cost of insurance for everyone. So we will see some increases.
Now, mortgage interest rates have gone up quite a bit since the beginning of the year. Many of you are wondering, should you buy now still or should you wait? Now, I invited Shannon Cole to participate in this next conversation. She's a preferred lender of mine to get her perspective in terms of buying now or waiting, the market situation, and projections for future mortgage interest rates. There is a lot of talk in terms of the Fed being very strong when it comes to curbing inflation. And with that, we're all assuming that the mortgage interest rates are going to continue to go up towards the end of the year. Is that your take as well?
They're trying to control inflation, which is at this 41-year high. We're all feeling it in all aspects of our life. There's going to be another 75 basis point rate, but that's to the Fed fund rate, which is very different than the mortgage interest rate. So that rate is the overnight rate that is charged to banks. But how it trickles over and how mortgage interest rates are impacted, inflation is one of the primary drivers of interest rates. Inflation going up, mortgage interest rates tend to go up. So that's what we're experiencing right now. So if and when we get the inflation under control, go into a recession, you will see mortgage rates come down. Historically, recession brings down the mortgage interest rates. So we may experience a little more pain until inflation is brought under control. The housing market will stay stable. There's a lot of different charts out there that even though there's a little more supply right now, it's being compared to what supply was earlier this year, which was essentially none. But overall, it's healthy to have some supply in the market. The demand is still stronger than what the supply is. So that part is healthy. The whole purpose of us trying to fight inflation trigger the slowing of the economy, which then creates the recession, and then we come back out of it, the lower interest rates, and I don't think it's going to impact housing. We're going through a correction in pricing right now, at least in Southwest Florida.
And I totally agree with you. If anything, there's going to be a slight price drop, but even that is questionable if you average it out during the year.
I think it was last week, if you went into the MLS and it showed, I think, 470 something price reductions. So immediately you might think, oh my gosh, we're heading that way. But then if you really dissect the information, you can see that over 300 of those price reductions were all from Open Door. Open Door, who just calls the person, hey, I'll just buy your house today for this low price. And then they try to, inflate it to make a profit. Those were most of the reductions here in Southwest Central Florida. If you took all of those out, there were really like under 40 bona fide price reductions.
When does it make sense to buy as a buyer? And when does it actually make sense to wait until the mortgage interest rates go back down again? What is your take on this?
Well, definitely, we've all read the headlines. Mortgage interest rates definitely surpassed 6% this week. I think as of this afternoon, they're right in the mid 6% range on a primary home purchase, which is the highest they've been since 2008. So it definitely has impacted someone's buying power. Right. That being said, especially for first-time home buyers, I still would venture and speak with a mortgage professional to get pre-approved so you can look at that payment. And if it's something you can afford, even if it's a little bit higher than what you were thinking about, I would say pull the trigger and go forward, because, keep in mind that mortgage payment is not going to be subject to future inflation. It's going to stay the same as long as you have that loan. So in that respect, I would say to at least get with a mortgage professional and a realtor to see what a payment is going to look like and if you can afford it. If the high rates are truly preventing somebody from qualifying for a loan right now, then it may be best just to wait a little bit until they do start to come down.
Okay, let's take a scenario where they talk to you and then they come to the conclusion that it's actually going to be costing them more money on a monthly basis to have a mortgage, so to purchase a home versus to rent. If that's the scenario, what's your take on that?
It's a common scenario, so I'm glad you brought that up, because currently right now, if they're making that move from renting to buying a home, I can pretty much assure you that mortgage payment, once you factor in the taxes and insurance and, if there's an HOA fee or not, it is going to be $100 to a couple $100 more than what you're currently paying in rent. But again, if it's a home you like, you want, and you can fit it into your budget, I would say proceed now, because again, you're locking in that mortgage payment. You can't control what your rent is going to do 6 months from now or a year from now, or whenever your lease expires, I should say. So it could still be a good move to do. And then as rates do come down, whenever that happens, a year from now, 2 years from now, there's always an opportunity to refinance into a lower payment if it makes financial sense.
If they're getting to the point where they're refinancing, what are the steps involved and the costs involved in doing that?
Well, the steps, great question. The steps involved are very similar to when you're initially starting to get pre-approved to purchase your home. There's a new application, and depending on what type of loan you're currently in, whether there's a full credit qualifying or streamlined, you would need to make a new application, talk with your loan officer to go through the options so that, number one, they can determine that there is what we call a net tangible benefit to refinancing. The lower rate, lower payment, what are you trying to do? Maybe the rates are so low you want to take it from the 30-year fix down to a 15-year fix. There's a few steps involved, but one of the nice things is if it makes financial sense to refinance when rates come down, you have the ability to roll in the closing costs so that there's not that additional cash out of pocket. And there are still closing costs. They're a little bit less than when you purchase a property in Florida. The title insurance and doc stamps are, quite a bit less.
Do me a favor, if this video was insightful to you, please like it. It does help out the channel. So my goal today was to provide you with an update and equip you with information to help you make the right decision for you. If you've decided that now's the time to buy, watch this video here, which is going to help you take a much more strategic approach. Also, leave a note in the comment section below if you have any thoughts or questions in regards to this video. For matters pertaining to Jennifer or Shannon's area of expertise, feel free to contact them directly. I also included their information in the description section. Thank you so much for watching this video today. I always appreciate when you do. Take care.